Yes guys, welcome back to the channel. Today we'll be covering the Bitcoin market cycles and looking back in history to previous market cycles to give us a bit of an idea of how these bear markets play out, and hopefully you'll get some insight into what to look out for and how to better position ourselves for upcoming bull markets in the future. Now I just want to stress I'm not a financial advisor. This video offers no financial advice, just entertainment and education for your edutainment purposes. Alright, so let's jump into the charts, and what we're going to do is we're going to compare the market cycles from 2014, 2018 and the current market cycle we're in. So in this second market cycle here, we can see a correction from top to bottom of roughly 87%, give or take. So going into the next cycle, there was a correction from top to bottom, if my computer decides to work, down from a high of 20,000 down to 3,000, and a correction of about 84%. So a 3% difference from the corrections of the second cycle to the third cycle. Now this current cycle is quite interesting because many people think the bottom is in, and whether you buy at say 17k, which is the current bottom, or we have another capitulation event and it goes down to 12 or 13k, whatever price, if you have a time horizon of say 5 years, it's not really going to matter if you cherry pick the bottom or not. As long as you establish a position in the market at these prices, I think in the long term you'll be doing yourself a great deal. That's not financial advice, just my opinion. But what we're going to do is, from the high of 69,000 in 2021, we can see from top to the current bottom is 74%. So that's a 10% difference between this current cycle and the previous cycle. Alright, so now we're going to move on to a couple of moving averages that I've been looking out for. We're going to move on to the 100-week moving average and the 200-week moving average. Now these offer some really interesting data points, and as you can see, every time we have crossed below the 100-week, we go and test the 200-week moving average. So you can see here in 2014 we crossed the 100-week and we test the 200-week. Back in 2018-19 we crossed below the 100-week and we test the 200-week. Now in both of these cycles here, when we've done this, we have actually had a bounce off the 200-week after spending multiple months there, as you can see in 2015 and in 2019. However, this cycle has offered a bit of a different path. We've crossed the 100-week and we have failed to hold the 200-week as support. So now we're just kind of we're a bit range bound really below the 200-week, and we've actually spent a few months now down below these moving averages. Alright guys, so even if you think the 17,000 floor is not the true market cycle bottom, I think it's important to hedge against your biases. So what I mean by that is, if you think we are going to have another capitulation event down to say 12, 13 or whatever number, it's important maybe to establish a position down at these levels just in case that final capitulation event never comes and we just go sideways here before going into the next bull phase. So it's important to not be biased and take on both perspectives so you can better establish yourself in the market. Alright guys, so this next part of the video is a great indicator to notice trend reversals for risk assets, and I'd use this for the dollar currency index. So we can see in the dollar currency index, in March of 2020 the US dollar started to fall, and you may be wondering what Bitcoin was doing in that time. Well, in March of 2020 we can see it had just bounced off of the 200-week moving average and started its first leg up to 64k. And we can also see this in the second peak, when the second peak occurred and we hit a high of 69k in November and started moving down. Look what the dollar was doing in November 2021. The dollar had just moved sideways for a bit and then started its parabolic run. So I use the US dollar as a great indicator for trend reversals, and if we actually zoom out quickly, we can see here that the dollar really is on a mad parabolic run right now. It's closing up on the highs of 2001 when it hit 120. So to make that a bit clearer, I'll just put a line on the graph here. So about 120, 121. And this is an area of resistance I believe that the US dollar will face once it gets to this level. We may burst through it, or we may, kind of hit it and kind of be range bound for a bit, looking to see if we can break through or get rejected by this level. So what I'm looking out for is, while the US dollar is on a parabolic run like it is now, I don't see how Bitcoin can really go on another crazy parabolic rally. I think personally, it's just my opinion, I believe we're going to be moving sideways for a bit before we have a potential last, capitulation event towards the end of the year, before, going into a bit of an accumulation phase. So, if this insight has been helpful, leave a like, subscribe, any comments down below, I'll get back to you. Remember, none of this is financial advice, just my opinion, but I hope it's offered some kind of reinsurance, some of the things to look out for as you navigate these markets. So without further ado, I think we'll wrap it up there. Take care, everyone.